Welcome back to TradeVerse Insights. Today, we're diving into one of the most reliable and beginner-friendly indicators in technical analysis, the RSI, or Relative Strength Index. But we're not just going to explain what RSI is. We'll give you a complete RSI-based day trading strategy that includes entry, exit, stop loss, take profit, and real chart examples. Let's get started. RSI stands for Relative Strength Index. It's a momentum oscillator that measures the speed and change of price movements on a scale of 0 to 100. By default, RSI uses 14 periods to calculate whether an asset is overbought or oversold. RSI above 70 usually means overbought, a potential reversal or pullback zone. RSI below 30 usually means oversold, a potential bounce or buying opportunity. But that's not all. RSI can do a lot more than just show overbought or oversold conditions. Best RSI settings for day trading. For day trading, the default RSI setting of 14 periods can be too slow. Most day traders prefer to use RSI 5, 7, or 9 to make it more sensitive to short-term price movements. Recommended RSI settings for day trading: RSI period 7, overbought level 80, oversold level 20. This helps avoid false signals in lower time frames like 5-minute or 15-minute charts. Best time frames for RSI in day trading. If you're day trading with RSI, stick to lower time frames. 5-minute, 15-minute, and 30-minute charts work well. Use a higher time frame like 1 hour or 4 hour to confirm the general trend. Remember, RSI works better with the trend, not against it. Entry strategy using RSI. Here's a simple and powerful RSI entry strategy for day trading. Identify the trend. Use a moving average like the 50 EMA to find the overall direction. If price is above the EMA, focus on buy signals. If price is below, focus on sell signals. Wait for RSI extreme. In an uptrend, wait for RSI to dip below 30, then cross back above 30 equals buy signal. In a downtrend, wait for RSI to rise above 70, then cross back below 70 equals sell signal. Confirm with price action. Look for a bullish or bearish candle pattern like a pin bar, engulfing, or doji at the signal area. Exit strategy using RSI. Use RSI levels to help with timing exits. For long positions, consider taking profit near RSI 70 to 80. For short positions, consider exiting near RSI 20 to 30. Alternatively, use risk-to-reward ratio-based targets like 1 to 2 or 1 to 3 RR based on stop-loss size, or exit at previous support, resistance zones. Stop-loss placement. Stop-loss is essential in day trading to limit your risk. Here's how to place it with RSI strategy. For buy trades, place stop-loss just below the swing low that formed before the RSI signal. For sell trades, place stop-loss just above the swing high before the RSI signal. This protects your trade while giving the market room to breathe. Disclaimer: this content is for informational and educational purposes only and should not be construed as financial advice. Always do your own research before making any investment or trading.